Make sure everything is clear. Should hear me loud and clear there. Let me know in the chat where you're tuning in from. Give me city, state, country. If you're having a great Sunday thus far, if you went to church, if you're a faith based person, if you're not, if you just had a good time with the family, maybe you took a nap, maybe you worked. I don't know what you did, but just let me know in the chat if you're able to type. I always say that we have new individuals that come on here from various different videos from myself. So if you're new, welcome to the channel. Welcome to the family, the Leverage fam. And hopefully you can get some value today, especially for my folks that are re-listening to this. I won't make the intro too long because I know when I rewatch lives or want to get information, the intro sometimes is too long, get to the value. So you're more than welcome to skip ahead, right, and get right to where I'm sharing my screen. So thank y'all so much for being here, all the support. If you're not yet subscribed, make sure you hit that subscribe button, like button, notification bell, so you make sure you don't miss out on these videos. Each Sunday we come on here. Stock Sermon Sunday is our market analysis. So our read on the market and the economy, and maybe just pouring into you from a spiritual standpoint. Some people just need a little uplift before the week starts. So if you hear me kind of include that just a little bit, I don't want to just have a transactional relationship here with you. If we know each other, great, but I want to have a transformational relationship. So if you get the knowledge, wonderful, but a lot of folks are going through some stuff, personal, familial, right? Financial. And it's just, hey, someone just wish they were seen, right? Like, hey, I wish I was just seen and heard and valued and loved on. And man, am I the only one going through this stuff? Like, does anyone else see me or hear me or anyone else, trying to figure out this problem or solution? Right. So just know that you got a community here that sees that. All right. This is a holistic way of living and looking at things, and a lot of things that are going on in the market, it's emotional based, right? So I say to everyone that wants to learn this skill set or have better financial acumen or whatever it might be, is that who you are is going to translate onto the charts, and vice versa. It's going to show you who you are. If you're a fearful person, if you're a greedy person, if you are a person of hope and not strategy, whatever it is. All right. So thank y'all so much. If you're able to type in the chat really quick, I'll give a quick 2 minute buffer. I always give like a 10 to 15 minutes. So if you want to come on here, typically I put, 7 p.m. Eastern Standard Time, 6 p.m. Central, but I always give like a 10 to 15 minute buffer because I know people, oh man, I forgot, or they're getting their stuff together, whatever it is. Folks roll into church late, they roll into stuff late, and I probably should be a little bit more hardcore on that. Like if you miss it, you miss it. But hey, I just want folks to have the value and over deliver. All right, I've been on the other side, so I'll give a quick 2 minute buffer. If you could put anything down in the chat, that'd be wonderful. And yeah, yeah. As those 2 minutes are passing, for those of you that I live in Vegas now, so if you're ever rolling through Vegas, if you have a little bit of Leverage University access, or if you just want to grab a coffee, I do that for my Leverage University members. Grab a coffee or whatnot. But yeah, a lot of people are rolling through now, maybe versus Dallas. So yeah, there's that. What else? We had a windstorm today. A little bit of a windstorm. It's wild. You have those, I guess, here in the desert. So beautiful weather, though. Absolutely beautiful weather. I'll probably hit the hot tub after this, the sauna, maybe do a little workout, get ready for the week. But 65 degrees, little breeze, no humidity, can't complain. And when y'all start saying, well, the summer's coming for you, it's going to be hot, I'm like, can't be worse than I dealt with last summer here. And the dry heat is so much better than 100 degrees in Texas with humidity. So I'll take it any day. You can't win, right? Like, oh, it's going to be beautiful in the Midwest and Chicago and New York. And I'm like, in the summer, I'm like, yeah, I know, you take the good with the bad, So anyways, there's our 2 minute buffer. Let's get to it. Let me turn that off. Welcome to the channel. Welcome to our Stock Sermon Sundays, everybody. I appreciate you so much. As always, this is where we go over our Sunday market analysis. I give an overview for the economy, some news articles that are coming out, essentially trying to pull out the questions that people have that maybe they don't have the time for the research, or maybe they're still learning and they're having a lot of questions. So a headline comes on your Twitter feed, your Instagram feeds, and you start texting and sending it to everybody like, oh, did you see this? Did you see this? Like, yeah, we talked about it last week or so. They're like, what? This was expected that some type, if you're learning from myself and maybe from others, what do I say each time is that the market is going to release data and news at the time when people least expect it. So as the market was pulling back last week, crypto and Bitcoin, all this fear was coming out. And guess what? Right when it hit a certain chart level that I'll show on in just a second, 80,000, it ticked down into 78,000 on Bitcoin, right? That was an overextension on the RSI, the relative strength index, and it popped off of there with Trump's news. So do you see how it's aligning with the chart analysis that we have been doing and that I've been teaching many of you? And then it aligns with, oh, wow, the news came right there. No, it's not. It's not a coincidence that that happened. Okay. So as you're learning this skill set, as you're listening to myself and other thought leaders, just be mindful that you're putting the puzzle pieces together, and the puzzle pieces are not going to make sense, especially if you're fairly new to the markets. People ask the question all the time, well, how long does it take to make money? And how long does it take to learn this? And, I truly believe at least a year to just get the terms down, the concepts, and to see 4 different quarters of a full term year. And many people have only seen bullish runs, right? Actively investing, not passively. And you didn't even know it was a bear market in 2022. I'm talking about actively investing. Okay. So don't be frustrated on yourself. Don't be down on yourself if you're missing opportunities or fumbling the bag or whatever, or you're still confused, right? That is okay, but do not give up on this particular asset class, okay? Because a lot of folks do, and they miss out on a lot of opportunities where a lot of freedom can come. So they'd rather go with the safe route instead of spending time learning something that is not only just lucrative, but monetarily, but awareness of what's going on in the world, which a lot of us don't even care about. It's like, I could care less. We didn't grow up watching the news. If you were that kid watching the news, more power to you, right? But we weren't those people, many of us, who grew up wanting to sit in front of the news, right? So now the markets allow you to see the economic whole of what's going on. You don't even have to trade. You can just listen and say, oh, that's coming. Let me prepare my household. Oh, that's coming. Let me take a risk here. All right. So we're typically talking years ahead a lot of times. And what we're doing now is preparing for the end of 2025, middle of 2025, and into 2026 and 2027. What we're doing now is not necessarily going to benefit the now. It may in the short term, but it will benefit yourself at the end of the year and going into 2026. All right. Everybody cool with that? Can I get a 1 in the chat? Everybody cool with that? If you're not active today, that is perfectly fine. I always give just a little bit of brief moment to see if anyone's typing, acknowledge you, shout you out, all those good things. All right. If you're a note taker, I am a coach by trade, teacher by trade. You can go listen to my other videos for my background and stuff, but I will educate on this video and make sure that everyone understands in a concept. All right. We good? We good? We good? We good? Cool. Appreciate y'all. All right. Let's go ahead and share the screen. And intermediate time, if you stay, all those good things. We do have our stock market boot camp, so I'm just going to get that out the way. I'll talk about that a little bit later, after all the value. Okay, so our stock market boot camp is this week. A lot of y'all have signed up. Some of y'all are repeats, right? You're coming back to learn more, and I appreciate that because you're really wanting to acknowledge that I don't know everything, and I can't personally teach everything in live trading. I can't teach everything on a YouTube. I need intimate time with folks sometimes to have, an intimate space where we go on a Zoom, you ask questions, not while we're live trading. Okay. So if you're still on the fence, that code ends today. If you try to hit me up tomorrow, it will be $100 more for that. So take your $100 off, right? I don't like to say guaranteed, but most of the time, most people make that money back within the next month. All right. Anyway, so no pressure there, but I would love to have you inside. All right. If that's not for you, join Leverage University as well. That's just our monthly membership that gets you inside of our Discord where we have all of our trade ideas. I'm presenting the news, what's coming, answering questions for my members inside of there as well. So don't miss out on the information, and still tap into the YouTube channel if you still want to learn. Cool. All right. Without further ado, let's go. All right, as always, let's start on our economic calendar. Okay, so my methodology of going through this is going to be starting with fundamental analysis. Our fundamental analysis is where we're talking about the news and the data reports and the non-sexy stuff. Okay, like the sentiment of the market overall. This is how we prepare as long-term investors and short-term traders what's coming in the near future. Now, I always address my long-term investors different from my traders. So you'll hear me talking this live video here on the type of investor or trader that you are. Since I'm not speaking personally to you one-on-one, you've got to be aware of what your objective is. If you're a long-term investor, when we jump on the charts, I want you to pay attention to my monthly chart and my weekly chart. What's going to happen over the course of March and April, right? Those types of things. You might have to wait longer for the idea to play out. Okay, so I'll talk about that. For my short-term traders where we're live trading, or you may want to take profits and generate some income throughout the week, right? And day to day, then we're going to pay attention to the daily and the hourly charts when we get on the charts. Okay. And we also pay attention to these economic reports that are on here, because if we're trading during that week, those economic reports will affect the way the market is moving in that time span. Okay. I get that question a lot. That is why I'm addressing it, because when you hear me say the sentiment is bearish, you're like, Brian, there's a big bullish candle that just came off of Friday. What are you talking about? The Bitcoin just went up almost to back to 100K. What are you talking about? You'll see in a second when I am talking about cautiously being prepared for another potential lower high rejection. All right. So keep that in the back of your mind as I'm talking and going over these things. Am I a long term? Am I a short term trader? I want to make money this week. Or am I both? All right. We good? All right. So I'll start, since some of you maybe don't know, I'll address it in the middle of me talking about it. Okay. Here we go. Monday, Tuesday, Wednesday, Thursday, and Friday of this week. We're starting a new month. Okay. And this week, I would say it's a decent week of data. Okay. Now, this is something I'll be talking about in the boot camp as well, because how do you know what data is big, Brian, and how do you know what data is not big? That comes with time and understanding, watching how that data affects the market. So manufacturing PMI, ISM manufacturing on Monday, anytime, if you want to keep it simple, anytime you see 10 a.m. Eastern data, that data is very, very important. Okay, that is roughly about 30 minutes, not about, that is 30 minutes into the market. Okay, that data at 10 a.m. will affect the direction of the market. So if you've ever seen the first 30 minutes, like, man, my portfolio is doing great or my trade's going great, and then you didn't know data was coming out and you get slammed in one direction or the other. Okay, that is the reasoning why. You need to pay attention or understand what's happening that day, especially if you are day trading or you're trading that particular period of time during the week. Okay. Tuesday, a couple Fed speakers. Yeah, I don't pay too much attention to those. 9:45 data, PMI, also decently important. Another 10 a.m. factory orders will be important on Thursday. We have wholesale inventories, will be decent. Jobless claims always on Thursdays at 8:30. And then on Friday, we got some employment data. Okay, so some non-farm payrolls, employment data, which will be very, very volatile. So a lot of y'all like when I say, Brian, it helps when you give us like a read of what could potentially happen or should we expect. Okay, so what I'm expecting from this type of data, because a lot of the data is continuing how it has been previously. Now, it doesn't always have to be. What do you mean by that, Brian? That means that recently our data has not been very good. Okay, our jobs are suffering, right? Inflation is rising. I don't care really. If y'all got any real estate folks on here, I don't care that the mortgage rates are coming down. The prices of the mortgage, or excuse me, the homes are still high. Okay. So more power to you. You're still buying. People are buying real estate. Great. I'm not here to talk about that. But the state of the economy, we still have data that's not coming in very well. Okay. So I'm expected that data will continue in that direction. Okay. And I'll tell you on the charts the reasoning why. So when you see these massive reversals, they can be fake outs or traps, right? And we continue in the direction that we were. All right. So I'm expecting the first couple of days to have a recovery, right? Monday, Tuesday, Wednesday, maybe even into Thursday, maybe all week we have a really nice recovery, right? But the next week is very heavy. We have CPI and PPI data, which the last CPI and PPI reports were iffy. Okay, they were a little iffy. So I'm expecting that those inflation data reports will have a lot of volatility. And typically, what happens coming into CPI and PPI, you have profit taking, right? And this is understanding the psychology of the market. So if I'm a hedge fund or if I'm a big money player, I've got billions of dollars in cash and I ride this week up before all that data, would I want to carry those profits into that heavy data report? Potentially not. So if we finish green this week or wherever we end off at the end of the week, I'm expecting there may be a little bit of profit taking coming into the first half of the next week. So that is where I get my sentiment. And when I get on the charts, I get more granular. So if I have any advanced folks on here that are listening to me that do this, that trade, and you may just want another perspective, right? I'll show on the charts how I get a little bit more granular, meaning specific levels that we need to break above. If we break above, we can continue higher. If we can't break above those levels, we will continue on this downtrend that we've been on. All right. So cautiously open. That's all I'm saying. And for those that like my little saying or term, I just say keep my head on a swivel. Okay, keep my head on a swivel. All right. So that's where we are sitting at data for this week. So we should have some nice volatility during the first half of the market, and yeah, we'll see where we kind of pan out. So let's keep it going here and jump on to some other fundamental data, which is our fear and greed index. I'll jump on this one because this one always, acts up. So I'm going to get off of here really quick. I don't know why. Fear, we're in extreme fear in our stock market, and we're in extreme fear on the crypto market as well. So anytime you're in extreme fear, you should expect some buying to come back in. Okay. So if this extreme fear holds true to positive data, then we're ripping back up, above 600 on SPY, up to 606, 607, and we're reclaiming some of those upside levels, which you'll see on the charts in a second. So I'm correlating this fear and greed index with the charts that we'll see. Okay. So there's that. Let's check some of the news that's come in. Warren Buffett calls Trump's tariffs a tax on goods, says the tooth fairy doesn't pay him. So essentially, Warren is talking about that, hey, be careful who's going to pay for these things because the tooth fairy ain't paying these daggone tariff taxes. So where are they coming from, right? The reasoning may be why. And I'm just giving an elementary summary of this. What I was saying last week is that Warren's still holding on to his true self of selling some of his stocks, and he doesn't have to. It doesn't mean anything, but he's holding on to a bunch of cash, right? He's still not really buying these mini pullbacks that we're having. Okay, so last week and the week before, the month of February, a little bit more bearish. That's perfectly fine. It typically happens that way, and it was a healthy pullback. It didn't even get into correction zone, slightly into correction zone, but more of a healthy pullback, 2 to 5, creeping into that 6% pullback. All right, cool. All right. This was the big news data today that a lot of people, anytime there's bullish news on crypto, people go crazy. Okay. It's now time to buy. It's now time to buy. Man, it's going crazy. We're going to 150. Calm your horses. Okay. Buy the dip, but still strategize on where you're taking your upside to. Continue to buy the dip, continue to buy a dip, do your own due diligence, not financial advice. So President Trump announced the creation of strategic crypto reserves that will include Bitcoin, Ether, XRP, Solana Sol token, and Cardano in a post on his social platform, Truth Social. Reserve stockpile. Many crypto investors feel strongly that a crypto reserve should hold only Bitcoin, while some reject the idea of reserve holding digital assets together. So, his belief the US crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, executive order on digital assets. We know a lot of regulatories did not approve or want cryptocurrencies to get out to the masses that it was going to be used, even though they were buying them anyways. A lot of the financial institutions, a lot of the big wigs, it was saying Bitcoin was, Jamie Dimon from JP Morgan Chase. These they own crypto. So this type of news right here, it's the Trump administration, or this administration more specifically, is essentially trying to open up this quote unquote truth that this is where we're headed. Why are we fighting against it? That we know that the banks and the financial situation going on in our country is crap, right? It's trying to put these digital assets back into the user's hands, give them more autonomy to do what they want with their money, and also for themselves and the self benefit of, these billionaires and hedge funds. So that's all I'm going to look at for that. It was a nice pop. It made sense. So great. We'll go from there. I take these news pops as face value, right? Because this is the future, but it's the news release was very interesting that it was right on that dip. Okay. So I'll show on the charts now. There we go. Let me look at the chat. Any questions or thoughts for anybody? Questions, thoughts, perspectives? You are quiet right now. Maybe you're just getting into it. So just know that I'm checking the chat periodically. If you have any questions, or maybe you want to go in and put a ticker or company in the chat that you want me to chart out, please do so. All right. Let's jump on the charts. My favorite place where the money's made. And let's go over my analysis and thesis for this week of some levels to pay attention to. All right, so I'm going to clear everything out and give a full analysis here and show you my long-term investors, okay? And this also helps my short-term traders as well if you're waiting for a specific setup to occur, okay? So here is the S&P 500 ETF SPY, okay? And we have somewhat of a doji candle at the top of here. Now, again, terminology, as you hear throughout this, if you're confused, if you don't understand it, all those good things, that is a sign that maybe you should be in the boot camp or you should be in Leverage University, just saying, okay? So I don't have time to go over all the explanations of what these things mean, but this doji candle right here just gives a sign of the wicks of the candle and the body of the candle, showing a little bit of indecision. However, we had a candle close that was below the previous candle monthly highs, which was at 601.44. These green candles that closed the body of the candle at 655 cents. And then we had a candle close roughly around 601.88. And you can see that this candle closed right above, or excuse me, right below that monthly previous highs. So when you're looking at that big bullish move at the end of the day on Friday, if you don't know what I'm talking about, I'll go there quickly so you can see. All right, this big candle right here that squeezed up towards the end of the day. So those that are not analyzing the market like we are here, you might have a very opinionated, objective view of what's going to happen. And that's when you get faked out or trapped. Okay. We like to take a bigger outlook of what's really going on, get our historical context from previous times like this. So if I see a candle close that is below previous candle closes on a short-term, a monthly time frame here, we still have, in this regard, lower highs forming from these previous monthly candle closes. As you can see here, we closed higher on this candle, then was this candle, then was this candle. And then we had a big bullish candle that happened from the election into December. Then we had the month of, December right here. This was November bulls. December came in, a little bit iffy, but we barely closed higher here. We recovered nicely. And then we had sellers step in heavily in February. Okay, so this candle closure starts to now form lower highs. All right, so it might not seem like we have changed direction, but it's very, very slight, very, very faint. All right, on the bigger time frame, when you're looking at what type of market we're in, we are forming still. Let's see if I can do the drawing tool here. We're still forming higher lows. Okay, right there, right there, and right here. Okay, so it's still forming that trend like this. But if you look at this trend, I like to tell people to kind of like do one of these lean backs. Like some of y'all that don't have vision, if you never knew, slight side note, if you see me wear glasses, they're all blue light glasses. I have 20/20 vision. I don't wear glasses. I don't wear contacts, none of that stuff. So you ever see me wearing glasses, it's just for the look. Okay. But and if you see the hats, like, man, he likes wearing a lot of hats. It's because I hadn't got no haircut. Okay. But anyways, you can see here that if you take a little step back, you can see that we are starting to kind of get a little bit of top heaviness. That means those top wicks shows us where sellers are present are starting to step in a little bit more than previous times. Okay, we don't have too many top wicks that are forming on these higher lows. It's all big bottom wicks, big bullish candles, right? That recover and big wicks right there, wicks right there. There was a slight one back here in October, which is normal. Okay, but we've had a almost 4 month, really 3 month consolidation that's happened in this range. Okay. So it's been consolidating in this range, in this box, for about 2 months to 3 months. Okay. Once we broke out of this last range here of this uptrend, now we've been consolidating. Okay. So can some of you see it now where I have this trend up here and we've kind of been going sideways back and forth, which may be frustrating to some traders for some, and also to some long-term investors because they're waiting on that big breakout. We're going to SPY 700 and all those kind of things, right? They're wondering why Nvidia beat earnings and then they drop. Right? It's because the overall market is still in a consolidation up here where it's getting a little bit heavy and sellers are stepping in. Okay. So that is how I get my general read on, hey, I'm not too concerned about that Friday pop. And here's the reasoning why. Okay. Before we go into that, okay, if you wouldn't mind for me, okay, I'll do a little smile for you. If you wouldn't mind, that would help me out a lot. Take a screenshot, take a little, screenshot, hit me a like, comment in the chat. That would really help it, spur out to other people. Tag me on social, all those good things. Say, hey, I'm watching this right now. Y'all need to tap in. All right. So let's go back in history and look at some of these previous times where we had this very similar setup here on SPY. Okay. Let's go back to, again, 2018. Okay. And we'll go back even to the global financial crisis of 2008. So here is the 2008 scenario right here. Okay. Right before the drop. So do you see that we were coming up into that area where everyone was like, we are extremely bullish. And again, I'm on a monthly time frame. So this is from 2003, 2004, 2006, and then approaching into 2007 when, you've seen the movie before, okay? If you know it, put it in the chat, where they started questioning the housing market crash, or they started questioning like, we need a recession. We need a pullback. We keep going up and 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 up. Okay. And when it got to roughly around the end of or middle of 2007, again, we started to have this kind of double top consolidation. Okay. So this double top consolidation, that simply means that we have a failed breakout. A failed breakout means we're trying to come up, we come down, we come up, we fail to break out here, and we start forming what we call lower highs, right? And guess what? That consolidation area starts breaking out of this box. You see that candle that starts breaking very strongly underneath this previous low, which is right here, okay? We call it the neckline or the last line of defense. You see that area? Right there, break in, looks bullish, looks bullish. Oh, pullback, breakout. Nope, failed breakout. Oh, there's a buy up. Nope, lower high again. And then here it comes, flush. Then we turn this area of neckline into a resistance. Right there, it rejects. And then we start that global financial crisis right there in 2008, 2009. Put a 2 in the chat if this is good thus far. Okay, let me go back to 2001 and show you the same scenario. Extremely bullish. Okay, 96 into 2000, roughly a 4-year period. Okay, dot-com bubble, again, come up into an interesting consolidation here where we have another failed breakout, double top, 118, comes down, big bullish candle right there. And then the next month it fails and we start breaking out of this neckline right there. Okay, that support breaks under and we can't ever get back above it and it just continues. And now we've got a 2001 dot-com bubble. Okay, so we've got 2 scenarios of a big bullish run of about 4 years or so. Okay, and we have a consolidation double top on a monthly time frame and it breaks into a quote unquote recession or downturn. Okay, now Brian, are you, man, this is starting to look very eerie. Starting to look very eerie, Brian. Like, Dr. B, I'm starting to see what you're seeing. Are you predicting this is going to happen? No one knows what's going to happen, but investors, long term and short term, when you start to read these charts, you start to understand that these chart patterns are predictable to a certain extent based on time frame, and you're reacting to it. Okay, almost the same exact scenario. So when we come back to this area here, we're starting to get the same type of situation. A 4-year run roughly. All right, this is 2 years, right? 2022 to 2025 roughly. If we have an even bigger bullish move here, that would be technically a 4-year run. Okay. Now, from a structural standpoint of how charts and patterns work, right, we have what we call a measured move. Some of y'all have seen me do it before. Let me go from the bottom of the 2020 dip, go all the way up to the top, drag it, and that gives us our full measured move right there where we were headed. You're like, what the hell did you just do? It's called a measured move. This is a bull flag. Some of y'all have heard it before, right? Or a cup and a handle formation. Okay, go look it up. If you're like, oh snap, like this to me terms. Okay, if you're advanced, you already know these things. But these are the things that I teach in the boot camp and one-on-ones and all that kind of stuff that it takes time to understand. So when you get it, you're like, oh my goodness, right? So it gets your mindset of being a little bit open instead of one-sided. Okay, so here we go. If I move this up, this is called a Fibonacci extension. A Fibonacci extension is used when you don't know where we're going into blue sky territory. So that means that it is not yet at that level. If SPY was not at 500, it's never been at 500. So we've got to know where it's going from its previous move. So I measure the move from 2020 to 2022, give the deeper pullback here. Pull back. And it gives almost the exact measured move where SPY was supposed to head. Now, if I do it at the bottom of the candle closures, it gave us roughly around 600, 610. And you can see exactly where it's starting to, get a little bit exhausted. Okay. So there's a Fibonacci extension. Now, so the move has been made from the breakout of 2020. If you want to make it even clearer, let me measure that move with a candle like that and move it over to the breakout. There you go. See how it measures the length of that flagpole into the next flagpole. So we've made the move from the 2022 dip. So what does this mean moving forward? That means typically we have another retracement that looks, and if you've been watching me for a while or been sticking on these and you come every Sunday, I've been talking about some type of a pullback retracement to that 500 or 525 level. Okay. And I'll show you on the Fibonacci's, which is a tool that we can use to get levels. That pulls back right to that resistance area where big buyers stepped in right around this 520 to 525 zone. Okay. So it looks something like this as a realistic pullback where that would be a true correction to create a higher low on this trend like this. Look exactly where it starts. Do you see how that is a true realistic pullback of how it typically goes? So that would still keep the trend going, and it starts to get a little bit overextended, pull back heavy. People think everything's crashing, but that is the deeper pullback, okay, that everyone is speaking of. So in the short term, you can be bullish all you want because every dip is getting bought. But if I'm speaking to a long-term investor and they're like, Brian, should I load the boat up here? I'm like, I'm not your financial advisor. Personally, maybe I wish I was. I can only give you information based on my experiences, and you can go do your own due diligence. However, historical context, you cannot deny that this is a structural pullback to break out like that. Okay. And then we can take out the highs. If you load the boat up here, your risk to reward is not that great. So you can, if you're a long-term investor, you can dollar cost average all you want. So every healthy pullback that you get, 2 to 5%, you can pick up a little dip, right? 2 to 5%, pick up a little dip, like some of you did. But I see people on social, and it's great. We're excited. But I still see folks on social like getting excited about that this was the dip. And it may be. I'm open. If we take out the new highs, we go. I change my sentiment. I'm not too concerned about if someone's calling this or not. A true investor is not trying to prove a point. I'm not here to try to prove that, hey, you better be careful. There's going to be a recession. You can do whatever you want. I'm just telling you, I'm not buying these highs because most long-term investors, they've been buying long-term since, before 2020. So if you've had a portfolio just buying and buying, you got retirement accounts, whatever, you may have into the 90s. So you might as well just DCA, but you might start thinking like Warren Buffett. Like, why in the world would I buy all the way up here? Heavy, right? So that's who I'm talking to for long term. If you want to really get a dip buy like 2022, right, or a 2020 like flash crash, that is the level you want to look in the, below 600 ideally, but below 550 would be kind of your maybe turn on your alerts. If SPY gets below 550, if it takes another year or whatever, that will be my area of opportunity. Okay. Can I get a 2 in the chat if anyone is seeing what I'm seeing? Twos. Bet. Okay. Thank y'all so much. Appreciate it. So I think once I start showing this and maybe just the way I explain things or teach people, like even if you're a beginner, you're like, oh, okay. Like I kind of see it now when people are talking about, a healthier pullback than this. When you start looking on a monthly time frame. Okay. Now let's go in a little bit deeper here to the weekly time frame, because SPY or the S&P gives us a sentiment of what other stocks may do. So then we get a little bit more granular, as I said earlier. Okay, so we're still on this uptrend here, right? Like that. Now let me show you also something very cool here, which is a Fibonacci. I'll go back to the monthly really quick, which is a Fibonacci retracement. Okay, so if I go, I need to change this because I was messing around with some stuff. Let me go to proportions, go back to 0. turn everything back on. All right. Okay. So on a monthly time frame, buyers, okay, buyers typically like to, if I go from the 2022 lows to the 2025 highs, where we are right now, where we're getting a little bit stuck, you can see these numbers and percentages over here. So look exactly where the 38.2% retracement is sitting. Buyers typically like to take big moves to 61.8 and 38.2. So if I do a retracement and draw it, where does that come right back to where we were saying earlier? Right back to that low 500s, below 520, below 550, right? And that would be a nice dip buy opportunity right in that area that you saw me do earlier. Okay. So this is how, when some of y'all ask me, how do you keep your cool so much, man? Like, how do you not excited about these little flash crashes? I'm like, this isn't even nothing. That's nothing. You can trade this back and forth, right? But that is not the big, if you're hearing people say the next 90 days or the next 60 days, like wealth opportunities, and by the end of 2025, they're talking about, and I haven't even listened to those videos. I just see the headlines, right? I stay in my own lane. So you can see that, oh man, like he sounds like somebody else or whatever. I don't watch anyone else's videos, any other stuff before I do my analysis. Okay. So that goes right to that area. So if we do get some type of another COVID situation or another flash crash, or maybe it's this recovery, then back to bearish sentiment, that is the area of interest that people are talking about. Okay. Now the 61.8 would be even a further retracement down to exactly where? The bigger retest level to retest that breakout that we had, which would be right around that 450, 460 range. And that would be even bigger of an opportunity. That would be perfection. Okay. Everybody's seeing it. So the first line of defense, roughly around, 520 or below. Okay. And then the next line of defense will be 460. So that could take all year. That could be 2026. But just as always, not here to convey you or sway you or whatever. I'm just here to prepare people to what a true opportunity looks like. Not this consolidation back and forth. Okay. All right. So those are where I get my levels. So I go ahead and mark my levels. I turn on my alerts. And whenever that moment happens, whenever it is, take forever. Until then, I'll just keep DCAing if I see something that I want on a dip, right? Or I'll just keep trading it. Okay. I'll give a bullish sentiment as well. So this isn't all going to be bearish or whatnot. The question of the day is this the dip, or should I buy the dip opportunity? Okay. And I'll go over crypto as well. Okay. All right. Let's go into the daily time frame. Brian, did you see that crazy squeeze at the end of the day on Friday? Yes. Okay. Why did that happen? Why do we see this big bullish candle here, right? If we go into a shorter time frame, you can see here how big of a last minute end of the day squeeze that was in the last roughly hour of the market, where we pretty much, broke out of the trend and came back up to the upside all day. We were at 582 and we moved $10 on SPY within an hour or so. That's a lot. Okay. Why does that happen? Investors or traders that have been doing it for a while, and if you understand this as well, I don't, portray that anyone, I'm still learning too, right? But if you've been doing it for a little bit and you've seen a couple of markets, you understand that what institutional buying looks like and what stop loss is being triggered and a squeeze happens. Okay. So everyone was short. Most people were short. When we got a break underneath this 589 right here, do you see that level? Break underneath 589. It retests up to the top here, forms a lower high again. So another bear flag and comes into that level. So it's forming bear flags all the way down, right? So when big money and hedge funds are trailing and moving their stop losses down, right? And trying to ride the wave. This was innately bearish on Friday for a potential drop into these lows of 580, 575. Okay. That is where it was ultimately headed right here. Okay. You see all those gaps that are starting to present themselves? That's where it was headed, at least down to 580 or 579. So what happens at times is that you will have, especially at the end of the month, you will have profit taking that comes in, or they're starting to offload their positions. So hedge funds, big money, big traders, even retail traders like myself, if I was bearish all week holding a trade and I was, holding and holding and holding and holding SPY all the way down, okay, I'm going to start trimming my profits towards the end of the day. And what happens is stop losses get triggered. So if everyone essentially, imagine if, which in the future, hopefully this channel is at 100K plus and whatnot. Imagine 100K of individuals all just get out of their multiple six-figure positions all at once. That's what happens with hedge funds, right? They take all their profits and stop losses get triggered. Well, this isn't really buying necessarily. Like big institutional buying, maybe a little bit right here, but most traders and investors are looking at this as just simply stop losses got triggered, sell orders got out, they had to cover, and essentially it just squeezed back up at the end of the day. Right? And people were just riding the wave. It's like, oh, let me just jump into some calls and see what I can get. Right? That's not true buying. That's just stop losses triggered and all the orders get squeezed. Okay. So understanding the difference in that is it takes time to learn. I try to teach it in my one-on-ones. I try to explain it here, but it just takes time to understand what that looks like. Because someone can say, man, we're bullish. Look at this big bullish candle here. We're coming all the back up to all-time highs. Hold your horses. Okay. Hold your horses because still we have other levels to break. And like I said, on that big time frame, we got to understand we're still in consolidation, just like everyone on NVIDIA that bought it at 113, wrote it up to 140, didn't take profit. NVIDIA had earnings, came all the way back down to 115. Very, very similar. Okay. So let's talk about a bearish and bullish sentiment for this week so you can understand what levels play out. All right. So a level that I'm paying attention to very, very closely is 598 to 599. Okay. 598 to 599. So I don't care if you're trading NVIDIA. I don't care if you're trading crypto. I don't care whatever you're trading. Pay attention to SPY 599, 598. Okay. This is where we flushed and we could not get above right here. And we came all the way back down to 582. Okay. We pushed up into this level last time. Everyone thought it was flash crashing, pushed back up into that level, failed it, gap down, came all the way back down to 575, right? So this level is very, very heavy. You can see right there, 599, right there, 599. You see this top wick here. They got a little bit heavy right there. Sellers stepped in. You can see also where buyers are stepping in at 599. So if you want to round it to 600, but the closer it gets to 598, 599, that is a big area of interest of what it does at that range. So if you just say on Monday or Tuesday, it pushes up in this level and you immediately jump into calls, right? Or whatever you're trading. It could be NVIDIA, whatever, because all the rest of the stocks typically are going to follow suit with what the overall market is doing. So if we see SPY moving up into 598, 599, okay, please do not have a one-sided bias. Oh man, Brian, like that 599, I'm going to reject that. Patience, okay? Y'all knew who I'm talking, you know who I'm talking to, half of y'all, okay? Patience. If I see resistance there, I may try to take a reject off of 598, 599, okay? But I need to see sellers step in at that level. Very similar to what it looks like here. Come back down, okay? So that level, pay highly close attention to this week, 598, 599 of what it does, okay? Even if you just watch, if you don't trade it and you're still learning, pay attention to that level, Okay. This could essentially be a push up into there, and then it gives back the whole move because that wasn't a real push. There was not real buyers. It pulls all the way back down to 589, 591, and there is where support is again. And that is where you would want to consider what it does at this area at 591 to 593 in that zone, all the way in here as buyers, because then we could rip back up if buyers step back in. If they fail, okay, if they fail that level and we fail back underneath 589, that is weak again, and that meant nothing, and we're coming all the way back down to 575. Can you see visually how now these pops or these drops can fake a lot of folks out if they do not understand charting, they don't understand economic sentiment, and they're like, why do I keep losing, or why do I keep holding my trade too long, or it doesn't work out for me? It works. Just please keep tapping in, okay? And for my, folks on here that have been doing it for a little bit and you understand this, please just put a 3 in the chat saying, hey, yes, or if you agree or if you disagree, okay? That is how it would look. So that is another bearish move, another trap, as we call it, okay? Now, here's a bullish sentiment, okay, which I'm also prepared for. If we get above 600, okay, we get up above 600 into 601, and we start holding up here. We start holding like that. That will have a move up into that 606 and 610 area again, which we need to pay attention to what it does there. Okay. Because we're still not out of the water. It could just be chopping again in this, what do we call it? This big consolidation area again. Okay. So you see how it's going back and forth and back and forth and back and forth. You cannot decide which way it's going. We're in the middle of a range. Look at this red line that I have here. We're literally in the middle of this chop range. At 600 is very pivotal. We can go up, back up to the highs. We reject and come out. And what does this look like? Do y'all remember what I showed you earlier in 2008 and 2001? Remember that neckline I was saying right there, that if we break out of this box and we get strong, weak, do you see how that could become a rejection? Does that not look almost identical? And then there's those gaps down, and that's where it starts. Do you see it? That is why I'm telling folks and I implore folks to be on these things, be in a community, understand what the economy is doing, because you will not be shocked. Okay? Because this is just a chart. And when the chart plays out and you hear the news saying, oh, pandemic, blah, 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 we're shutting down, tariffs, we're going to war, blah, 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 Zelensky, whatever they're doing to say. Okay? That is when housing crashes, mortgage prices going down, but prices high, people defaulting on mortgages, like all that stuff. There we go. Okay. So it looks almost identical. So I'll be paying attention very closely what we do in this range. But innately, over a course of time, we're going higher. Okay. But this scares the hell out of people. All right. We good? All right. Let me check the chat. Make sure everybody's good. Docs, if you got any questions, and please put them in. Please, please, please put them in. Only twos, only twos, only twos. Man, y'all must be just listening. You're just like tuned in. All right. So there's that. I'm also looking at the S&P futures here. Okay, slightly red after hours on a Sunday. So interesting there. Okay, so let me erase those. Get it out of people's minds so they don't start getting fearful and whatnot. Okay. So let me go on a daily time frame. And pull back to this weekly high here. And let me do a Fibonacci retracement here, right there. Okay. So that most recent low on a daily. You can see there that where do we pull back to? Right to that roughly about 23.6% retracement. And then there, right, that 590, 591, which is the 38.2 retracement, that is where we reclaimed. And where exactly is, come on now, where exactly is that 61.8% retracement area where we have a lot of action? Typically have a lot of action around 38.2 and 61.8, right at that 598, 599 area. Interesting. Okay. There we go. So that is how we get our analysis. That's how we wait and are patient for certain levels. Now, what's an intermediate level? Okay. An intermediate level would be right around here, around 5. What's another rejection area? Right around this 595 area. I put that as just like an intermediate. If you're inside of my Leverage University, inside of live trading, you know what I'm talking about. Okay. Sometimes there's earlier levels where we could reject, which would be around 595 in that area. It's not always exact. Okay. So could have some reaction around that area and fall over a little bit, potentially. Okay. Now, what you want to think about into tomorrow, if we're trading, you're trading tomorrow on your own or with a group, or you end up joining us inside the university, okay, would be 589 would be a decent pullback that you would want to watch for calls ideally. Okay. So you'd want to wait for that ideal like pullback drop in the morning, or if it happens right off open. If you want to try a little scalp short with puts, you're more than welcome to, right? But a lot of folks are like, man, this is bullish. It broke above that previous high right there, 588, and it started squeezing. Now we're in this support range again. Okay. So that is what the pullback you would want to be ideally looking for is into 589, 590, potentially for a pullback if you're trading, day trading tomorrow or whatnot, and then take it back up to 595 and ultimately back up into that 599. And it would look something like that. And all the bulls and everybody's going to be, cheering and clapping. And yes, I do trade calls too, so don't get it twisted, right? But I am not neglecting that 599, 600 level. Okay. But in this area, bulls are going to be heavily present. Okay. In that area, bulls are going to be heavily present, trying to take it back up to that 599, 598. Okay. So I'm just letting you know, don't get stuck in the middle of this range. Trade at the bottom of the range, low 590s, and trade at the top of the range, 599. We clear? If you do any otherwise, do it on your own accord, or it's scalping. Get in, get out. Okay. If you don't know how to do this, join the university, join our boot camp this week. Okay. All right. There's our full analysis on the market. Can I get a 5 in the chat? Did that help? And this is just the start on SPY. The SPY and the S&P 500 futures on ES, and this gives us a sentiment. I just did a economic report, what's going to happen with those reports, and we're going to react off those reports. So do you see now, for my beginners or anyone that's never heard this before or not inside of our community, I get my levels on the charts, and then I'm also aware of what data is presenting that week. So if ISM comes in negative, then okay, we may be failing back underneath. Okay, we're bearish again. If ISM data comes in positive, or PMI comes in positive, or whatever data report reports this week comes in positive, non-farm payrolls at the end of the week, and it gives a nice sentiment, then we're going to that 599. We may push up above 600. So you get your levels, you're aware of the data, and we react based on day trading more specifically. Okay. So, but long term, I'm waiting on a bigger pullback. May buy a little bit of dip here or there. And you got to understand long term investors, depending on their trading style or their investing style, nobody's worried about anybody else. Man, you should have bought that dip. You didn't see that dip. Uh, that's fine. You bought it. Everyone is on their own journey. Okay. So you have to be your own investor and you have to have your game plan of what you want out of the market. If you miss it and you only got a little piece of it and you're only in a little bit, great. You're comfortable with that. I'm not worried about all those things. If you loaded the boat on that 79,000 Bitcoin drop, great. I'm not loading the boat at 79,000 personally. Okay. So that's why everyone's different. All right. If you picked up a little bit, great opportunity. Right. But you got to have and stick to your game plan about what you're comfortable with, risk to reward, and you go from there. Because everyone thinks they're, know exactly where things are going. And then everyone keeps yapping their mouth and then they get slammed or they win either way. All right. So 5, 5, 5. Everybody good. All right, cool. All right. There's SPY. So everybody comfortable with levels. Cool. We're watching that 599. We're reacting around there and we're going to see what happens. Okay. QQQ. I'm not going to do a full analysis on QQQ like I did on SPY. It's pretty much the same. I'll do a quick retracement here or Fibonacci extension on a monthly time frame. Extension, pull it back from that 2020 low, take it up, pull it back to that 2020, and we have overextended into that area. Okay, so you see how it got heavy right around that 500 level. We got a little spur, obviously with tech and AI news being strong, but you see these top wicks starting to get heavy again for on a monthly. Big top wick selling there, top wick selling there, top wick selling there, and then also we know that NVIDIA, even with positive earnings, pull back, it keeps getting slammed down below that 140 level. Okay, so if that is to be true, then we've made the full measured move. Okay. Also, if I measure it for my non-visual people, move that over to there, should take us up right around that area of 512 or so. So we've made the full measured move from 2022. Okay. And when you make the full measured move, that is typically a time where you get that healthy pullback into those areas. If I do another Fibonacci retracement here, you can see that 61.8% is right at that level where buyers step back in, which would be right around that 430 level. So when you're like, God dang, 500 to 430, that's crazy. Yeah, not really if you just understand the charts and the levels and look on a monthly time frame. Look at this. That probably looked crazy to people when people were saying like, oh man, QQQ pulling back from 400 to 250. That's ridiculous. Ain't nobody giving up no 50%. Okay. Okay. Believe what you want to believe. And then there you go. There's the rip. If you want to pull back to 38 or maybe 50% retracement, that's a beautiful level right where I already had it marked, which is right at that roughly 396, 400 level. Okay, which is 50%. All right, and that 100% is getting real heavy up here. 540, getting real heavy. Pull back to that 61.8. And ultimately, we could see some interest around that 478 and 480, which was also where buyers stepped in. See right there, big bullish candle off of that 78.6%. All right, there you go. So there's QQQ on a bigger time frame of my long term, or if you're waiting for something to happen, those are the levels that you would ultimately want to wait on to see that we have a bigger move coming. All right, and maybe some more downside. Okay. Again, this is a beautiful double top. I love QQQ's chart because it is a clear failed breakdown. Like we said in 2008, there we go, consolidation, double top, almost identical to this 2008 situation, which looked better on SPY. because there we go. Right around here, kind of double top high, start forming lower highs, big rejection, failed to go higher, and we start picking up some steam and aggressiveness right there in 2008. I'm glad this is recorded because I really want to like come back to this and see if something plays out. All right. Where's that neckline breakout? Would be right around this area of 500. If we lose 500, we're probably going to start tumbling pretty quickly down to that 478 and 480 level. If we lose 500, we'll turn that 500 into a rejection and we'll start coming down into that 478. Okay. So ideally 500 needs to continuously hold. And right now, I believe, again, same sentiment personally, is that this is a little push off of this level, big bullish candle through there. We need to see that QQQ can get back above 515. That would kind of be my interest level there on QQQ. 515, maybe 510, but you see this 515 level right around here. If I move that right back up, 513 and some change. Okay, 513 and some change. So ultimately 515 would be that level. Okay, so it needs to break back above 515 confidently and ultimately reclaim 520 in my opinion. If it gets back up against there, then we can confidently hold for calls or long positions. If it starts doing like this, then we can take it back up. All right, otherwise, clear double top, clear sellers multiple times right there, lower highs, failed breakout, come back up. This could simply be another trap and fill the rest of that gap. That rhymed. Everyone see it. Okay. Folks that are not aware of this stuff, I swear, I look at all the tweets, I look at the threads, and like, man, what happened? It's crap. This thing just slammed back down, blah blah. Okay. Wild. But then when they're right, see, I told you. Okay. They're not saying that person to me. I'm just saying, I'm just role playing here. All right, there's QQQ. Let's go through some other quick ones for the week. On NVIDIA, folks, again, very clear here on NVIDIA, lower highs being formed. If I draw a Fibonacci retracement here, again, from these highs down to these lows, most recently on let's go on a daily time frame and bring it from that 143 where we rejected, right? And we retrace back up to the 50%. And then ultimately that 61.8. So you should expect that QQQ roughly around 127 or 131 having some action. And what do I mean by action? We could pop, right? And I'll be correlating this to SPY and QQQ. So if I see SPY above 601, 602, then QQQ may want to go back up to this 137. Excuse me, NVIDIA may want to go back up to that 137 and ultimately back up to that 141, which is fine. Right? I'll still trade break, retest pullbacks, break, retest pullbacks. And y'all know me in the community. If I can get some scalp puts, I'm perfectly fine with that. It's my strategy. Okay. So I'm still comfortable scalping puts on the way up, which a lot of folks are not comfortable with, and that's cool. Right? So 127, 131, ideally. So push back up into these areas. You can see there where the rejections are coming in. Clear level right there. Previous low. You can see what happened right here at 127, 127, reject, reject. And then this is what a breakout would look like. Do you see how we broke out, above almost into 130 and then pulled back heavily into 125 and then kept going? So I would need something like that to give me confidence that, okay, we can go all the way back up. All right. Your support on NVIDIA, if you're trading it this week, same sentiment, is if we don't get that push immediately and it pulls back on Monday or Tuesday, right? Still look for, ideally, if you can, bulls to step back in, most likely, which would roughly be around that 120 range for a pullback, maybe 121, and then take it back up to that level. Ultimately, it's trying to go to 127, 130, 131. So if you want to just make it a round even number, 129, 130. Okay, that's where it's trying to get to, because those are where the retracements are and the levels. You see right there at 124, and it's pretty much sitting above that. Okay, so little pullback calls should work out for most folks this week. So just watch your entries if you're trading alone. All right. This is the time where you want to put it in the chat if you have any specific IBM and Merck. Okay, cool. Tesla, another very interesting one here. A lot of bullish volume here off Tesla, but again, with SPY, I'll just be paying close attention to it. This is a perfect retest area that we talked about on Tesla when we've been talking about for weeks. I said Tesla, it'll be back at 300. 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 Ultimately, 270 was that area, and it pretty much to perfection came back to that 270 area. If we do another Fibonacci retracement here, it should be at a very key level, which is that 38.2% retracement. Bounce right off that 38.2. It's going to try to get back up to that 300 and then 320 range, where again we could see another reject. Okay, so watching out for those higher ends. Still, we're not out of the water yet, and we could see another reject from Tesla if possible, where we push back up into that 320, 330 range, and we'll get rejected again. Okay, so this is normal. Very similar to this move. You see how we were coming down, coming down, coming down, coming down. Big bullish weekly candle here, recovery. Great, bull step back in. That's expected. We had a decent pullback here from that area, which was 23% on a pullback. They're going to buy that dip and ride it back up, roughly 380 to roughly like 40 points. Okay, but then look what happened right after that. It continues in the trend. Okay, so again, you need big candle closures, big reclaims, something like that to start breaking out on Tesla. If you really truly want to consider this the bottom, you can buy the dip and ride it back up. It's warranted. But holding this, you got to have levels where you're trying to hold it to. Okay, if you're trading it. If you're long-term investing it, this is a great opportunity for a dip buy if you believe in Tesla. I would rather buy it closer to this 23.6%, which is around 220 and 200. Okay, maybe even 250. Okay, so it's not out of the water that Tesla can come lower down to that 250, 200 range. Okay, does the Fibonacci help some folks see how we get these levels or where buyers step in? These are all just tools, right? And that's why I don't use too many of them too quickly, is because it may confuse some folks. They're like, oh my gosh, well, this is too much. Fibonacci, where do you take it to? That's why some folks need one-on-one. I don't care who you do it with. I don't care what mentorship. I don't care how many videos you watch. You may need some consulting, or you're just going to have to trial and error it multiple times. Keep watching videos, because actively doing it consistently, it does take time to understand where do you pull it back to. Do I pull it back to here? Do I pull it back to here? Do I pull it back to here? Those are hard questions to answer while we're live trading. Okay. So that's why I try to do these free videos. That's why I try to do these lives. I try to do all kind of stuff to help folks out, so you know what questions to ask. Okay. And if you don't desire to learn it, that's cool too. All right. So I'd mark this on Tesla, where if I trade calls or if you trade the upside, you'd want to pay attention to that 325 area to take it as a target. So that would be the retracement area that you would be trying to take it to, where you might want to trim some profits if you're trading it. Okay. And also an intermediate level at 300. So what does it do at 300? Okay. So when you see an investor being very patient, like, why don't you take that trade? Why don't you take that trade? Why don't you take that trade? It's because typically they're looking for the bigger idea. So they may, I've gone 2 days without trading before. I'm like, hey guys, I don't see nothing I really want to do because I'm maybe waiting for that bigger move. I'll miss the whole upside to take that bigger retracement down. Or I'll start seeing that the upside is confirmed and I'm like, okay, I'll join you now. Right. All right. All right. There's Tesla levels. Amazon. I really want Amazon at 200. I think personally it has more to go. But again, I'll do another retracement here. Let me bring it down on a daily. Okay, decent area there at 200. That is where some confluence, previous resistance, a lot of support there. So ultimately, just not even using the Fibonacci tools, that is ultimately where I'd want Amazon to kind of come back to. So if it does retrace back up into this 220 range or this 216 again, I'd be looking at that area of interest, 222, 216, and then taking it back down. So whether it's there or it's there. If Amazon fails or I see some resistance, if it holds, then we're going all the way back up to highs. If SPY, continues and we get good data, maybe the Fed comes out and says they're cutting rates or whatever it is. All right. So Amazon's been trading very, very nicely. I'll be watching this, but you can see that we have changed trend a little bit, and this could just be a retest. So we broke trend, come back up, retest, and maybe it even comes back up into here, which would form. It's very ugly. It's very, very ugly. Potential head and shoulders. Okay. So Amazon watch 216 this week for your top end level. So if you trade calls up to that level, right, you're more than welcome to take it to 216. Right, watch that. There's a little bit of a gap fill up to 225, and bullishness would be a reclaim of 220. Okay, so watch this 220, 216 area on Amazon if you're looking at trading Amazon back up like this. So if it pulls back like that, and then we take off, cool. It looks something like that. Okay, so pullbacks immediately. I personally think that we can go higher. We are in extreme fear, but the closer, if you're chasing, just watch those up, those levels to the top, 220. If we break above 220, then you can take it to 225. All right. Oh, this is interesting. Google, because my thesis is so strong that we could come lower, I still may day trade. I don't know if I'm ready to long or bottom tick this Google. So I've been looking at Google as a big swing trade in our community, and I still have not gotten an entry just yet because of how aggressive this bearish candle is. Okay, and there's some gaps below, so that we didn't feel last time we came down here. So I don't want to get in too early. So I still may try to day trade Google back up, but I need to see it kind of confirm that it's holding above this 166, 167. Personally, before I'm comfortable like loading up on a big swing trade, in my opinion, just the way that I trade. Okay. I sleep better at night, knowing that I got a very, very good entry, like almost dramatic entry. If I come down here, where did it bounce? Right at that 38.2% at 68.87. Okay. So Google could retrace back up to the 175, 176 area. But ultimately, if it rejects right there again, or it rejects that 188, or excuse me, 180 area, maybe it gives back the whole move like this. That's wonderful, right? But again, I'd still be looking for, that's where I would really load up personally. Back at 150, 160, or if SPY kind of made its full retracement move. All right. So still kind of iffy on longing the tech companies. I'll still day trade it, like maybe for short swings or like a monthly swing or maybe like a week or something like that. But yeah, that's just me. That's just me. So here's what I'll be looking at on Google. If you feel otherwise and you want to look at June contracts, or I know we have, my boy James inside of our community, awesome swing trader. Um, if you can't add multiple times and you're not comfortable with it, like if this is only your first ad, like please be careful on it and maybe take your profits. But look at this beautiful gap fill opportunity up. So this could be it. So I don't ever take the first move off personally. I typically like to wait for that move to happen like that. And then I typically want a pullback like this. And then I want to find a higher low like that. And then start seeing it build and build and then break like that. That's personally the type of long trade or swing trade that I'm comfortable taking. So that's just me. Everyone's different, right? So if you bottom tick this and you just bought the dip, great. If you're trading it, right, I'll be watching it above this 176 and then taking it up to 180 plus, and then there we go. That could happen. Google could come in with some positive news, then we're back up to 200. So I think it's a great area if Google holds above 170, 168, right at that area. I think it's a great, great level. Google contracts are also not that pricey, so I think it's a great opportunity for a lot of people that are newer to trading that don't want to spend a lot of money on their trade. So pay attention to Google. Microsoft, same idea. Big gap fill up from their earnings drop. Microsoft, very good level here at 385. I think Microsoft's level is beautiful personally. Still concerning, but I think back up to at least this retracement here of 415, 420 would be my area. 415, 420. So another 20-point move back to the upside recovery, ideally. But if it goes and we start reclaiming, holding, some very key levels, really above this 420 level, that's the level I'll be watching. Because that's the last time we rejected pretty hard there off this 419, 420. So I marked that on your charts, 419, 420. So if you're trading calls back up, that's where you want to take it to, ideally. But you'd want it to get back above 400. So can I check in with everybody? Can I get a 6 in the chat? 6 in the chat if everybody is still with me, still understanding this is good. Let me go to IBM and Merck next. All right. IBM, Merck, and then the rest I'll save for if no one has any questions in the chat. IBM, I'm still holding a short position on IBM. Don't typically swing short as far as puts, but I love this big gap fill, and IBM was not that pricey to get in, so I'm still holding my put position personally. I'll be watching this 257 area or just this retest of this trend line. So ideally retest of that trend line, something like that. I'm okay if it goes against me a little bit. I may add another one depending on how it goes. So I'll be looking for it broke out of this trend, double bottomed a little bit, retest the trend into that 255 level, or it fails back underneath 250, and then maybe it comes down like this. Okay. So that would be an amazing full gap fill trade, which kind of happened with Palantir and it happened with APP after their earnings. All right. So if you've never seen that before, there's a big gap right there. APP, it dropped from 525 all the way back down to 300. So those gaps worked very, very well right there where it filled that gap, overextended, came all the way back down. Same thing on Airbnb. Okay. I'll be talking about my gap fill strategy on Tuesday through Thursday. I'm not sure which day, but I know I have a lot of questions on it. So there's another big gap right there. Airbnb went all the way to 163, came all the way back to the 138. Okay. So you can kind of see what I'm trying to do on IBM. big gap. So there you go. Hope that answered the question. IBM, Merck, beautiful, just absolutely bottom ticked. I think we called this to perfection. See how that chart played out beautifully, waiting for that real big confluence area at $80. Previous resistance, previous resistance. This is one of the cleanest charts in my opinion. So Merck, just I think it's great. I think you can still hold personally if you're still holding that, and your target's 100. And if healthcare picks back up, I mean, if it breaks above 100, we're going to 110, so on and so forth. So yeah, if I do a retracement on this Fibonacci retracement all the way down from the bottom, there's your 23.6 next level right there, 38.2, 50%. And then the ultimate big target be right there at 110, 61.8. Okay. Beautiful chart, beautiful call. Yeah. So I think this was that nice little pullback, bull flag. If I do a measured move here, right there, and move it over to right there, there it is, 100. All right. Chat. Anything else? 6666. Appreciate y'all. Not the best number to call out, but whatever. Let me go to crypto. My crypto folks. My crypto folks. Let me check on my short position on crypto. I shorted Tron. TRX, TRON is the crypto name, Tron. So let me see what it's doing because Bitcoin's pulling back from that 96K. If y'all saw my story this morning, beautiful entry. So still holding it up. So just making money while we're talking now. All right. Same type of idea with Bitcoin. This was a news spur. If y'all remember from the last video or last weekend, remember when I showed these different ad positions? I think this was on our Thought Leader Thursday. Look exactly where we marked that ad at. I didn't change anything. If y'all know, you know, from our Thought Leader Thursday, or if you rewatch the video, look at that ad position right there. And why did it stop right there? Okay. Let's see if the retracement from that previous low brought it down to a 50% retracement at 79,000. But the 38.2 retracement is right at our level we talked about, which is right around 70 to 72,000. So this is a nice pop, but what if it rejects this 78.6 and comes right back down into that 72,000 where a bigger buying opportunity could come? Do you see how that could happen? Because why? We're still forming lower highs. Okay. There's a difference between trading it and long-term investing it. So if you picked up the 79,000 dip, that's great. But what did I say last week? Still be prepared for ad 2 and ad 3. Okay. Does that help? Okay. Now, again, Bitcoin, if I do a full Fibonacci extension, okay, what we did before, if I pull it back from this low up to this high, pull it back, it is right at that 100K, 97 to 100K, where we have made the full measured move from 2020 2-ish, 3-ish. Okay, so if I drag this over, move this over, we have pretty much made the full measured move. So the pullback would likely be at 70 to 72,000. Okay, which is why you see some profit taking maybe happening right now. Right, so we popped on Bitcoin today based off that news. We did a little news pop. Great, that's perfectly fine. Beautiful. Right here at 87,000 and 95,000. Okay, pull back from 95 to 92. And then ultimately we'll probably pull back to this 91 and see what it does there. Okay, so I still want to watch 91,000. on Bitcoin, what it does at 91,000. If we fail back underneath 91,000, then there you go. There's your failed news, sentiment. So still watch 91,000 as we did before. Okay. So not bearish. I'm just showing you sentiment on a bigger time frame on a monthly of what this is. Okay. If it breaks back above 100 or ultimately like 98,000, then cool. We're breaking out. That's fine. All right. That's why you have different ad preparations. If your ad one rips, you're a genius, right? But you've got to have preparation for ad two and then load the boat at ad three, which, 60,000, 50,000, some numbers you've been hearing out in the wild. Okay. Cool. Ethereum, beautiful level. We talked about 2,000. I charted this out inside the community. If you're not checking that, check the crypto section. 2,000, 2,100. That is a clean level because previous high, buyers, buyers, buyers. And that was pretty much just a clean chart level. You didn't really need any retracements or anything crazy. Clean level at 2,000. Okay. So level you'd be want to watch is roughly around 2,700 and $3 grand. What does it do at 2,700 at $3 grand? Okay. Cool. All right. Cardano, beautiful bull flag here that we drew out in the community. If you don't believe me, for some of those that haven't seen inside of our Discord, I'll be wrapping up here. So make sure you get your final questions in. Okay. Make sure you get your final questions in. I'm wrapping up in the next 15 or so, top of the hour. Okay. We got our crypto hub right here on ADA. Okay, so if you don't know how to get here inside of our community, if you don't even see this, that means you do not have university access. You need to get inside of our university. I think there's like a 10% pop up that may pop up if you go on the Watt platform. All right, just wait like a couple of seconds. All right, threads at the very top here. That is where I organize them. Okay. ADA, you need to be looking at these ideally. If you turn off your notifications, just on the weekends, just what did Brian like chart out for this week or whatever. Let me scan back through some of those threads and see, try to do my best to be organized. All right. ADA, this was back in beginning of January. I said a nice bull flag is forming on ADA, which is Cardano, and then even a bigger pullback right here. Where do we say roughly about 68 cent? You see that bull flag, how I charted it out before it popped. And then look how it looks now. Okay. So it's repeated patterns no matter what you are trading, no matter what you're looking at, long-term or short-term. Bull flags, bear flags, head and shoulders, inverse head and shoulders, double tops, all those kind of things. Those are charting patterns. But if you are a simple investor, meaning you want to keep it simple, start with just the fear and greed index. That is okay. Start with that. Buy the fear, sell or, sell the greed, meaning be a little bit comfortable taking some profits when it's in greed. Okay. But it's not always perfect because we sold more when we were in fear and neutral. So we went all the way up to neutral and then we sold back down more. Okay. But this is a great gauge to do it at the extremes, the extreme ends. Okay. So if you want to keep it simple, but if you want to get more dialed, like I really want to get more specific and understand this, then that's where the charting patterns come in. And we keep it simple. Bull flags, bear flags, double tops, using the RSI sometimes, which is that, is it overbought? Is it oversold? So you can only have 4 things that you pay attention to. Really, is it overbought? Is it oversold? And just pay attention to those if you'd like. All right. That's about it. That's all I got. Went over some crypto. Dogecoin, another beautiful chart here. Bull flag, pull back into that 20-cent range. It'll eventually retest all the way back up to 40. So again, anywhere between, I think, 15 to 20 cent on Dogecoin, obviously holding above 20 cent. Okay. I think it's a decent buy opportunity to put a little something in there, not financial advice, but beautiful chart pattern here. Bull flag, pull back, and then another one starting to form. Okay. So we shall see what plays out. Cool. Going once, going twice. Final questions, concerns, perspectives. If this was helpful, screenshot it, let anyone else know, all those good things. If you learned something, if you're new here, I think I covered most of the things um, from a psychological standpoint. And I'm more than welcome to answer nothing that pertains. Maybe it's like, Brian, why do people, why are they not successful in options? Or maybe it's, what do you think about the futures market? Or what do you think about this? Like, I can just give a general perspective if you'd like to hear that for the last 15 minutes. Like, hey, I'm struggling with this, or I see many people struggling with this. Every time I do this, this happens. I just can't seem to get it, right? Or how do you deal with fear? Or how do you deal with patience? Like, what is your morning routine? Like, stuff like that, if you'd like to know those things. If it's something off topic, maybe it's quick business. Um, I don't know. Whatever you feel is in your heart to maybe just spur up a conversation for the last 15, but, or maybe it's another stock that you want me to take a look at. So what I typically do on my process, I'll go into, and while y'all coming up with your questions, I'll keep it on a monthly. And people always wonder, like, it's a lot of stocks, right? This is like a big watch list, Dr. B. Like, how do you keep up with all of them? I've been trading actively for the last 6 to 7 years. Okay. So I remember when Robinhood came out in 2013, 2014 or whatever, like when it used to be that light, weird color green and now it's like a lime green. So like I've traded on other platforms, Thinkorswim and some other like old school stuff. So I've tried everything. And I think that's what helps some investors like be better teachers is that they make it simple, but they have a very well-rounded outlook on a lot of different things and sectors. So how does Target move? How does that affect the market? How does the financial sector move? And how does that affect the market? Right. So that's essentially how I get a sentiment of having all these things because I've been organized based off of color, sectors, and I have my different watch lists. But day to day, I typically only have like 5 to 7 things that I'm looking at that I'm going to actively like day trade. Right. But I have that big watch list to understand the whole of the market, like what the sectors are doing. So if I scroll and I see finance, or if I see this purple right here is all my crypto, right? So I can just scroll down and see that, is it red? Is it green? What is Bitcoin doing? So I don't even have to jump into it. I can just scroll and see. The green is my banking or finance. So Visa, if I see some red after hours, I'm like, okay, that will affect SPY if I see finance a little bit red. Um, these are kind of like my memes or just like, the Game Stops, DJT, Black, just something that, people are interested in. And then the orange are kind of like my slower movers, right? They're kind of things that are solid companies that will move the market, but people hold for long term, right? Like the Disneys, the Nikes, the McDonald's, IBM, which has been around forever, HD, Home Depot, Caterpillar, like things like that, that I don't necessarily want to day trade sometimes because they're just like, yeah, they move well, but they're just a little bit too slow for me to day trade it. But they may present opportunity for a swing trade or a dip buy for shares. Like PayPal is very interesting right now, personally. A little bit oversold, right? And I know people have interesting views on PayPal, but I'm just talking about from a trading perspective. Very interesting, oversold on a daily. Um, Gap fill above. So very interesting chart. I'll probably put this as an idea inside of our community, inside of leverage. But yeah, it's just one of those. I've made a lot of money on PayPal and trading it. I've traded it before. So this is a pretty big retracement move if it comes all the way back up. So I'll be paying attention to that. It's also at a very interesting psychological level at 70 and interesting previous high there that turns into support. So who knows? PayPal could be something interesting, but I'd probably do it lighter size just because it's been innately bearish and just sold off everything. Even with good earnings, it dropped. So PayPal had good earnings and still dropped back down. But you can see here, interesting area, 70, 70, 70. It's pulled back to 70. So yeah, I want a little free game there. I'll probably move PayPal up a little bit into my area of interest. And we shall see. All right, that should get enough time to ask questions or anything that anyone has. Yeah, you're so welcome, Megan. Thank y'all so much for helping out. I mean, coming in. I appreciate you. If y'all got to run, you're more than welcome to dip out. Do you do your trading on Webull? Yeah, I do my trading on Webull, but most recently I've been doing it on Robinhood as well. And the reason why I do it on Robinhood, it's a very simple reason, is that I like access to my money very, very quickly. If I make $1,000 in 2 days, I want to be able to use that $1,000 the next day. Like that's just how I like to do things. Like whether that's putting it back into the market or um, if that's paying a bill or doing whatever I want to do with it. Right. I just would rather have control of that 1,000. Okay. Webull is wonderful. Like here's my trading setup for Webull. Now, when you're talking about trading, if you're talking about day trading, like you make profits and you sell it that day, that's beautiful. If you're just, I think Webull is one of the best platforms personally. What they can improve upon is getting your money a little bit quicker. So it does. So if you request a withdrawal, just say I make $1,000 with Webull, it may take like 2 days to get to your bank account. With Robinhood, I can have it the next day, cleared into my bank account, instant deposit, transfer, and I can use it. So that's the only thing sometimes when I switch back and forth, why I never leave Webull, but why you'll see like either screenshots or whatever of Robinhood when people are like, I don't think, like, I don't really like Robinhood or whatever their viewpoint is, right? But I have that Robinhood Legend video that is just absolutely exploded to this point where you can now have Robinhood Legend, which is their more advanced platform, look like my day trading platform for options on Webull, right? So I love Webull. I think it could be, someone's maybe just long-term brokerage, or it could be their swing trading brokerage where they don't need the money or they don't desire to have the money. They just want to see the count grow and grow and grow and grow and grow. Um, so yeah, I have three main brokerages. Well, four, but I have three main that I use. Webull and Robinhood, ideally for like day trading and whatnot. Charles Schwab is kind of like long term. I don't want to touch it, look at it. Like if anything, if I see like a big pullback or a crash or whatever, like Charles Schwab. And then I have my JP Morgan as well, where I kind of do some swing trading. So that's where some of people in the community will see like a different kind of screenshot from me, which would look like this, right? Like that's JP Morgan. So I put that swing trade of IBM into, which is now up, I think like 200 something percent. I think I put it in the wins channel or something. Yeah, I don't know where it was. But yeah, so that's why that looks different, because I intentionally don't want to see a swing trade. I don't want to be, it may take a week to play out, may take 2 weeks to play out. I'll check on it periodically. But for me personally, psychologically, Trent, like that's why you hear me say, like, I think someone eventually might need two brokerages at least. One for their like long-term portfolio and, stuff they don't want to look at. They just buy and hold, buy and hold, buy and hold, retirement, whatever they want to do. I'm not touching this for another year, 2 years, 5 years. And maybe they do swing trading in there as well if they want to. So something that may take, a month to play out, because swing trading, people think it's easy, but it's still difficult, because you could have swings back and forth. You're up 200% and then you want to do the full move. So it's got to go against you for a little bit. And then you're like, oh man. And then it makes the full move. Right. So sometimes I don't want to see that day in and day out. So if I open up my Robinhood and I'm like, dang, my swing trades, I'm distracted, right? So it's a psychological game why I keep my day trading account only like I'm out of everything within that day and it's cleared. So I don't have things lingering, right? Because it messes with your psyche. That's a question. That's a really good question, Trent, because I've had people ask me that before. Oh, that's a great question too. So how many days of the week are you trading on average? Do you set a goal each day? And once you meet that, you stop? Um, yes. So I'll answer it simply for everybody. How many days of the week are you trading on average? If I was not live trading and trying to help everybody, ideally, I'd probably only be trading 3 days a week: Tuesday, Wednesday, Thursday, and maybe if something presented on Friday. Like if I wasn't live trading and trying to help people, and like if you want to really be transparent for those that want to know, you try running a community. Some of y'all are like, I don't want to run a community. I love it. But it is a full-time like thing that I love. So I miss some trades because I'm trying to get everyone to win. And that's the risk I'm willing to take. So if I were trading by myself, I'd be like, hey guys, I'm not trading today. But people would start being like, dang, like I want to learn, I want to trade. Okay. So I've committed myself to trading Monday through Friday with the group for at least an hour and a half or so. So if y'all really want to know, so I do not trade normally 5 days out of the week because I don't have to. If I made $2,000 in 2 or 3 days, I don't want to trade the rest of the week. Right. So Trent, that is my normal and then what's actually going on. So I do show up 5 days a week unless I tell the community, hey, I don't feel well, or hey, I don't see anything. You can trade on your own, whatever. And I try to let everybody know. That answers that question. Do you set a goal each day and once you meet that, you stop? Yes and no. So I like to set a percentage goal each day. So each trade that I take, I try to have at least a 30% trade, right? So if I put my normal size position on, just say it's my normal size, if I'm really confident in a trade, is roughly 3 to 4,000 into that trade. Okay. Like I'm really confident in a trade. I want to put risk on. I'm putting, 2,500 to 3-ish grand, or just say a 3 grand for a round number. So if I make 30% on 3 grand, that's $900. So that's my trade for the day. If I am a little bit less confident, like maybe right now, I'm like, maybe I want to wait a little bit. I might only put $900 into the trade, maybe 1,000. So let's round it to 1,000. So if I take a 30% trade, that's $300 for the day. So that's when y'all see me in the community, like some of these wins that I have, you're like, oh, he's only maybe making 300, but I see other people making X, Y, and Z. We're taking the same trade. I just rather buy long-term shares or do something else with my money than trying to put 25,000, 30,000 into a trade when $300 to $400 a day for some folks, you do the math. You do not need a 2,000, 3,000, 4,000, $5,000 day every day. That means you're putting on more risk. So you see people making $5, $6, $7,000 a day. They're putting $30,000, $40,000 into the trade, right? I'd rather just buy shares. I don't want to put $30,000 into a day trade personally, at least right now. So do you see here? There's $400 trade, right? And there's my $700 something dollars for that trade, right? So just to give y'all a perspective, you do not need a lot of money to make a decent amount in the market. You just have to know what you're doing for those trades and be comfortable with my daily goal is anywhere between $300 to $1,000 a day. All right. So hopefully that answers the question. Um, so if I have $300 a day, I typically slow down, Trent. If you want a true, like, if I have a $300 to $400 day, I'm like, that's someone's salary, whatever. I'm cool. I may find something else, but I lower my size position. So if I see something else, I'm like, I have a little bit of profits to play with, but I don't want to give anything else back. So I may put $100 into a trade, see if it can do 200-300%, right? Something like that. So if y'all want to see the trade wins, that was this on that day, $600. I put $100 that turned into 600. Right, you see it right here. I spent $115 for that contract. It went to $700, 350 something plus percent. So that's when, I do those types of things. So I don't have to risk a lot, right? All right. What do you think about GameStop? Okay, perfect. The killer, what's going on, brother? And or ma'am, whoever you are. I appreciate y'all. I'm gonna answer that question too. So I'm just going through Trent's, make sure I covered everything with him. What if you have an account on Robinhood already for long-term investing and don't want to mix two accounts for day trading? Is there a way around it? I think Dreamer asked this question too. I don't want to confuse people about moving things around. I'd rather just them have a certain amount that they're committed to trading with for the day. So just say someone has, I don't know, just round it to 10 grand. They got a 10 grand Robinhood account. If you got more or less, whatever. You got 10 grand in your Robinhood account. It's in crypto. It's in this. It's in that. And you're like, okay, I'm willing to use $1,000 to day trade with. The rest, I'm not touching. Not touching my crypto, not touching whatever. And you just pull over $1,000 into your buying power or whatever, and you're just committed to using that $1,000 to trade with in the same account. That's perfectly fine, right? So if I tell the community or tell anyone like, hey, this contract's going to cost you $100. I know Dreama's taken some really good trades as of late where it cost her $100 or so, right? That's 10% of the amount that you were going to trade with, right? So you pretty much, not risking really anything, but you're trading within the same account. So if you have that situation and you don't want to deal with moving all your positions over, don't do that. I would not recommend that, right? Just you got to have the psyche to know, because why I say that, Trent, is because I've had people, have a big account and they're like, maybe I'll sell, these shares that I have over here to trade with, or maybe I'll sell, a little bit of my crypto to trade with because I can make so much more money trading. That's why I say that, right? Because then you start looking like, man, I'm out of buying power, but I have some profits over here. Let me just sell some crypto to trade with, right? So if you commit and you can, manage it and have that psyche and self discipline, stay within the same account. Cool, awesome. I think it's cool, Trent, that you're also seeing that Dreama, so you can like ask her if it's real. Like, is he really calling these things out? Like, how is it like in there? I love always like the commentary back and forth. I'm not perfect, but I always try to do that. All right, let's go to the killer. The long position in Bitcoin last week was GameStop. What do you think about GME? What do you mean by the long position in Bitcoin last week was GameStop? If you're telling me that or questioning that, are you asking it? Just give me my perspective. I'm okay saying I'm not too familiar with GME and Bitcoin together last week. Okay, got you. GameStop is exploring investments in alternative assets, including crypto, Bitcoin. Let's see. GameStop urged to convert its 5 Bitcoin Cash into Bitcoin. Okay, that was 5 days ago via Reddit. Okay, so maybe there's a little bit of speculation around GameStop starting another big company, and GameStop, everyone wants to know is, is that going to pop along with Bitcoin and vice versa? So yeah, that could be, a little bit of the spur news. I don't think that too much into it personally. I look at the charts and look at the news correlates with the charts typically. So what do I think about GameStop? I personally do not trade GameStop at all. I think it's cool to watch, but if I were to chart it and I didn't see that it was GameStop, like let's just remove that this is GameStop. I think this is a beautiful pullback higher low area where it could pop. right? So if I were to give someone non-financial advice from a structural chart standpoint, right, then yeah, this is if I do it on a weekly and maybe I do a retracement back to this low, it pulled back to roughly about that 50%. Okay. So if GameStop, if this is its pullback and it has some type of positive news along with Bitcoin and it moves back up to 30, that's a 5-point move. If it spurts like it does sometimes, then that's a bull flag and it goes back up to 35. So if this is the retracement area of 50%, roughly around $22 to $23, it's right in that area. So that's how I read versus like the Reddits and the news and what people think. I just read the charts and then try to correlate the news to say, that could help it out. Hopefully that helps a little bit, right? So it is in a buying zone. You see, every time it gets around this 23, pops, 23, pops, 23, pops. So if you want to take a chance on GameStop, beautiful area. I just personally do not trade it. I like managing my trades. I don't like to have speculation and, meme stuff going on and, traps and all that kind of stuff. So I personally don't trade it. But if you do, charts area is in a buying zone. Does that help? Awesome. Yeah, she's trying to get you in, or maybe hopefully Dreamer, you protect the information. I don't really care, but I think it's beneficial when people join. Starbucks popped a little bit more, and we're at the top of the hour. Going once, going twice. I know it takes a minute for people to type their questions and whatnot, so I know there's people still hanging on. More people kind of popped in, so I appreciate you. I know a lot of questions. Thank you. Great answer. Yeah, you're so welcome. You're so welcome. So welcome. I think the charts, help so much because you get a lot of answers from folks. And I don't know who. I'm just saying folks in general. It's just very speculative. It's like, oh, this could do this. Oh, you should do this. Oh, well, why? Can you give me a rationale, like a concrete like rationale of maybe what I should consider? Right. And so people can see it themselves. Right. All right. Awesome. 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 All right, everybody. Thank you all so much. I appreciate the time. I'll be inside the Discord putting some watch lists in for this week, giving levels inside the community, inside of the Discord. If you want to get in there, make sure you click the links below or it's on my IG. I love you. Thank you so much for the support. There's been all good energy here, which I know in this investing space and whatnot. That's why I stay away. I just go on my own lane. It's just a lot of like bashing it, folks. And people are just trying to give good information. Target reports earnings 2 days. Do you capitalize on companies like this? Their earnings have been falling. Yeah, I do. Okay. I didn't care either way. I'm pretty sure she's like, that brother and sister relationship is like, this is my stuff. I paid for this. I'm doing my own thing. You need to do your own thing. I can see that being y'all's relationship. Oh man. Um, Target. Yeah, I do capitalize on this stuff. So anytime our earnings pulls back into their earnings, I like it a little bit more. Okay. So Target has been pulling back into their earnings. You can kind of see here that leading into their earnings, Target, I've been talking about Target for a minute, that the ideal area of opportunity would be back down into this like $100 range again, like close to like 110, 100, like touch this again one more time, if possible, like that, right? Because it would form almost perfectly into this area like that and then take off or break down. So yeah, I do think if from a long-term investor standpoint, I think Target close to 100 is a good buy personally. Obviously on these public platforms, I got to say non-financial advice, but yeah, you know what, you get my drift. anywhere close to 100. So $20 off if you're a long-term investor. If you can pick up a share or two, great. And then maybe pick up a little bit more closer to 100. But yeah, I don't mind Target. I don't mind Target. The only concern is that it's still in this downtrend, right? So it's still in this downtrend. So if I flip it, you see Target like that. So if it's still forming lower highs, lower highs, lower highs, look at where Target could potentially come to. If it does, it would come all the way back down to this area, 65. It's like, dang, $65? That's ridiculous. Well, was it ridiculous when Dollar General did it? See how Dollar General reacted right here at 100, popped all the way to 163, and then kept selling. Very solid company, just consumer spending's down. So that's my only concern if I think about it from a holistic standpoint. I think Target's great. I think it's a good buy around 100. But if consumer spending's down and whatnot, could it fall a little bit? Maybe. But I'm not betting necessarily against Target. And also, there's a gap to fill. Look at these gaps. There's it perfectly down to 100, and it's right in the middle of a range. Or it could pop on earnings and fill that gap. The last times it had earnings back in, what was this? Come on, hover over it. In August, that was probably from that little summer run, right? Typically, back to school, summer spending, it was expected that popped. So you see that big gap up. It went from 139 to 164. But look at this earnings most recently, which was right here. It gapped down, right? So it went from 160 back down to 120. So a little iffy, but yeah, I would like it lower personally now that I see those gaps. Anytime I see gaps below, I'm a little bit more concerned. Now, if it only had gaps up, that'd be different. Cool. All right. I think that's it. Y'all like when other folks ask questions. You're like, ooh, keep asking questions. All right. Thank y'all so much. Love you. Peace, love, and blessings to you. Until next time, I'll see y'all this week in live trading and on the boot camp, 7 p.m. Eastern, Tuesday through Wednesday. There will be PowerPoints. You get the full recordings from our past two boot camps. If you have questions on it, you're more than welcome to DM me. Say, hey, Brian, would it be good for me? All those kind of things. I don't mind answering that stuff. So make sure you just don't miss out on some opportunities. It's the beginning of the month. And this is when we typically game plan for easy trades, easy money for the month of March.